All right, concept of value. This for me was a huge game changer. Being able to understand that the market is a value seeking mechanism, that it's constantly searching for value. It's moving away from value at times, seeking new value, and it's moving back towards it. Right? As price of an asset becomes revalued. So I urge you to pay close attention to this section for sure. So where's the value? Each day, a stock goes through an auction process to find its value for that day. On that day, a stock can go through millions of transactions, but generally most of the volume happens at a few key areas. As the stock moves to and from these high volume / time areas that are created day by day, week by week, you find that these movements in the auction process are not random. There are a couple of neat ways in which to view this information, and it opens up a whole new world of viewing market information. I remember learning all these concepts gradually over time, and every time thinking, this is it. This is the one thing I was missing, and this is what's going to bring me success. It's very important to realize that no one aspect of trading will be the determining factor. It is a combination of the most important information that allows you to see the opportunity in a way you can take advantage of it. Enter market and volume profile. So as discussed in the market structure section, I use the terminology accept and reject, and that also applies here. So the main difference here is that instead of specific price levels, you can see these value areas are developing under the surface. So market profile, or MP, has to do with how much time is being spent in an area, and volume profile, or VP, as you probably already guessed, has to do with the volume accumulated in an area. When these areas coincide with important market structure levels, magic can happen. This will be a basic overview, and we will go into much more detail to integrate this into our trading in the next course. For now, it is most important to grasp that price is constantly oscillating towards and away from value on each and every time frame. So how they are built. So MP to the left and then VP to the right, so that's over here in this one. So market profile, volume profile. MP creates letters based on 30-minute periods and is extended up or down depending on the price range for that 30-minute period. Volume creates a histogram at each price point. This happens from open until close until a full market profile is built, and we can clearly see where and how the day's value was established. Right, so let's break this down a little bit here. So we can see this is what's called a balanced profile. And so what we see is, and you can tell, so the way that it works is essentially every 30-minute period is marked by a letter of the alphabet. So, and this is just a quick, if you already know this, I apologize, but for a lot of people, I feel like they have no idea what this is or the concept behind it. So anyways, that being said, so you have the, so the A time frame would be like, let's say the market opened at 9:30. So this would be 9:30 until 10 o'clock, right? And then B, this is the range for B from 10 o'clock to 10:30, right? And then C, and I believe these little arrows are where price transitioned during that time frame, right? So that means the 10:30 time frame closed at this level here, and that's where the C started. So we can see that price opened here, was balanced during that first half an hour, came here, we moved lower, so price momentum is now moving lower. The B time period closed, and then we move down to C, right? Balance, and then D, right? So for the first 2 hours, the market moved lower. So that's how you read it. And I think I'm going to show you in the future. You can break down these profiles into the 30-minute sections, and you can see them horizontally too. And I like that as well. But anyway, so that's how it's built over time. So, and then as it moved on in the day, obviously price stayed within this range. The price range was established for the most part during the first 2 hours of the trading. It looks like as price ran back up, it tagged up here in the L time frame, but then it slowly built out and we ended the day here. So this ending time frame for the MP, this is its point of control. This is where the value is established, the time value. And so you go, okay, well, why is time important? And I was curious about this as well because I was really, really strong on the volume profile because volume is what moves markets, right? But those 30-minute time periods, those 30-minute blocks, like if it's got enough volume to move through it, then then the range for those time periods are going to be big as well, right? So we want to know if there was a ton of volume that came in for a long period of time. That shows us that the market is very balanced between the sellers and the buyers, right? Even though there's tons of volume trading, what happened was during that period of churn, that you could call it, it's just trading hands, right? It's not being there wasn't overly aggressive buying or selling volume coming in. And so that's important to know, and you can only know that by the time frame, by the market profile. So for me, what I've seen and what's been most important for me is that, honestly, if I had to pick between one or the other, the market profile has been much more consistent in showing exactly where the value is established, where the value is, where it lies, and those important areas as compared to the volume profile, which is a bit more muddy, and it just doesn't have, because think about it. So let's say in the 10 o'clock time frame, right? You had a large amount of volume that came in, right? That's going to show you here in the volume profile. But we want to know, did that move the market? Right? And how far did it move the market within that time frame? And that shows you the strength of what's actually happening based on the volume. So anyways, they're both important. They're definitely both important concepts to understand. But if I had to pick one, I don't even know that I use the volume profile anymore. So it just becomes down to personal choice. So let's break this down real quick. The point of control, the maximum number of TPO, the time price opportunity. That's what this is, time price opportunity chart. Occurring horizontally where the price revisit happened that day. The value area. So this represents 68 to 70% of the trading done that day. So this over here is a better, visual representation of that. So you have most of the volume, 70% of the volume is traded there. So even though you have a TPO, which is a specific price point, where that was technically where value was established for the day, the value was established in this entire area, right? And we got to be flexible. Nothing happens nothing. It's not, price isn't going to reverse on because of one specific price point. It's going to reverse because price came down into this level somewhere randomly. It could be at the top, it could be in the middle, it could be at the bottom. It came down back into a previous value zone, and there were enough buyers that were waiting there that pushed it back out of here. It has nothing to do with a single price point. It has everything to do with where the value was created. So I hope that makes sense. So we talk about buying and selling tails. So these are just generally low areas of low volume, right? That are essentially insignificant. The prices were there; they were established during the day, but they don't mean much, right? We put a lot of weight on, a specific. Like I'll show you on the next chart is a candle, right? We say, okay, well, a previous day made a significant low at this specific price point. Well, what we'll see is that, well, yeah, it made a significant, price may have reversed from here, but honestly, this was the springboard. This right here represents 2 hours worth of time where price was here and it could not go lower, right? So this is important. This breaks down the candles where you can see, like a daily candle, see what's inside of it and see the specific price areas and the price points that are important and why they're important, right? So when you're drawing a trend line, I think that was the reason why I brought that up, was that when you're drawing a trend line and we're drawing the trend lines and the support and resistance levels at the specific price point, we got to say, hey, look, there's got to be some flexibility there, because this price point here, this is not significant. The significance is actually here. So, and some people actually draw their trend lines, they skip the tails and they draw them at the base or the body of the candle, because they say, well, the tail is usually insignificant, and I don't disagree with that. So it's just important to be aware of. And then if you're using a daily chart, it's even better to look at this, because then you go, okay, maybe this was a really long tail, but you know that the price that's going to have the biggest significant impact is going to be here and not down here. And so you're watching for price to come to this level and not this one. So, all right, let's move on. This just shows that this is a basic distribution curve. If you've done any kind of statistical research, schooling, whatnot, this is your your typical the way that most what's it called, your bell curve. So most of the numbers and everything are going to lie within here, and then your outliers are kind of like towards the tails, right? But the things that happen, like if you do a coin flip and you do it over a large sample size 20 times, you're going to have, this is your 50-50 zone. This is where if you flipped it 10 times and it landed on heads 9 times out of 10 for that run, those are the outliers. Those are going to be the things happen here. The value area, the largest part of the bell curve, is where the majority of volume is going to take place, is going to be drawn to happen here. But the tails are honestly where when an asset is revalued and price runs, it happens in these tail moves. And so we're going to go over how when price is rejected out of these and we're into these, that's where things get exciting, and that's where the money is to be made. All right, support and resistance in motion, right? So just real quickly, go back. Here's the bell, right? For this part of the profile, where did price move? Price moved out of that bell, moved away from it, right? It's the thin traded volume. Once it gets through there, that's where the price acceleration can really happen. All right. So the volume profile shows how much volume was traded at different prices throughout the day. You can plainly see how support and resistance levels develop and which are more significant. It's an important to question and understand why things happen so you can fully trust your decisions when putting money to work. The blue line, where most of the volume was traded for the day, is considered the point of control. So again, this would be a volume profile with the day's price action outlet, overlaid over top of it. And so you can see why it was built that way, right? Very little volume happened through here as price accelerated up through these levels. The value areas happen in the consolidation, right? And so this explains why these areas of support and resistance become significant, and also as to whether like this is not as significant as this. This right here is a much stronger area of support than this one is here, right? Because there's a lot more volume that traded in these areas. There's a lot more actors, people shifting money, moving hands, making moves, building positions. All right, the push-pull of value. You can plainly see how an asset interacts with the previous day's value areas. A stock may trend up for several days, but as you can see, it's a wild ride getting there. But if you can grasp these concepts and techniques, then you can absolutely profit from very typical fluctuations in price movement. This is where we begin to anticipate movements in price, because price moves the same. It's constantly either moving away from value or towards value. So if you can recognize how that works through momentum, through price action, and through trending, and then you know where the value areas are, then you can anticipate your profit target. You can recognize when it leaves the value area and it starts to trend, right? It's constantly going from trending to hanging out with value, right? We're either the price is trending or it's consolidating. Trending or consolidating, right? So that's what we see here. So let's just run through this a little bit. So you can see that there was, in the beginning of this profile here, right? So each one of these is a breakdown of that day's, this volume profile is for this day's price action here, right? So you can see how it's built here. It broke out through this area. I don't have this previous one, but you can see that it looks like price was breaking out to new highs here. So volume, lots of volume established in this area, right? Lots of volume trading this, and this ended up being the point of control for the day, right? This actually ended up being the largest. And we can already start to see, if you look a little bit over here, where did price come back down and test, right? So anyways, low to no volume up here because it was not tested, and when it broke through, momentum, right? Price was accepted through these levels. It wasn't rejected here, it was accepted. So price is going to continue to do price exploration things, right? The question is, how far is it going to go? We don't know. But if there was a previous support or a previous resistance level here, I can tell you where I was going to take some money off the table, right? We have areas that we can target. So anyways, price broke through here, came up here, and then was rejected. Now check this out. It was rejected back down into this area of low volume, right? Didn't quite come back down and touch this level. And that's another thing, right? If you were anticipating price coming down, you're like, I'm going to wait for it to come back down into this area or hit this high before buying. It never got there. And when you say, why would you do that anyways? Well, you figured, you're like, all right, well, I figured I would kind of retest the high that it broke out from. Well, if you had this volume profile over here, you go, well, once it breaks down this level right here, we just want to see anything bought and accepted and price rejected from this area back up in here to reestablish the uptrend. And that's exactly what happened, right? You can draw a little trend line down here, came down into this low volume area, popped right back up, right? Price said, we don't want to keep going lower. We want to go higher. So this is positive price action to the upside, right? And now we can see through the market profile what's happening behind the scenes, right? Or actually, I think this is going to be volume profile. So we see what's happening behind the scenes and underneath it, right? Because usually you just got your little histogram of volume down here. And you go, okay, I see that a lot of volume happened here on this move, and a lot of volume happened here on this move, and a lot of volume happened on this one. But until you see it sideways and how it's interacting and creating these levels, it really can be a game changer, and it was for me, absolutely. So okay, so let's move on. So let's go through. So this day ends, right? Comes back down here. This is the sorry, mind fart here. This is the value area high kind of area here. So all of your value, the 70% that we talked about, is down here. Price came back down, tested this area here, and then it consolidated, right? So the first part of this day was just this churn through this area here. And so what you'll also see too is you'll see these areas that are low volume, they'll become retested on different days, and they'll get, it's called filling in the profile. They will get filled in as price comes down here, spends time in this area, and builds the profile back out. So if you were to combine these 2 days, this would no longer look like this. It would just look kind of rounded, right? Can build in the profile. So that's something you can look forward to too, that this low value, look, this area was tested the next day. Boom, came down here, price exploration, right? It's checking out value. It's looking for new value. It's trying to find a home. Comes down here, fills in the value, comes down here and tests the previous point of control, breaks through this low volume area, comes and is rejected higher. We fail again through this in this area of consolidation, and then we move lower. And so you go, okay, at this point, you're like, meh, let's maybe have a reversal on our hands, right? Well, we continue to watch price action. We monitor it. We make a decision. Hey, maybe for this point and it moves lower, we decided we want to get short. But what we're watching is to see, again, how does price interact when it comes down through here? We want to see it break through this level and become accepted down below this level, right? And unfortunately, that never happens. We already know the previous day's trend was up. Looks like it's in line with a longer term trend. Tries to break through a couple times, and then boom, it is immediately rejected. Here, it's immediately rejected to the upside. And at this point, your short thesis is probably wrong. And we need to get back up to the upside. We need to go back. We need to get back long again, right? So now, where's price going? Boom, right to the previous consolidation, that day's point of control, right? And it comes up here, and it's going to test these levels here, right? This one right here. You draw straight across here. Boom, that's exactly what happened. Tested this previous level, popped right up to this one, right? Here to there. Then it was rejected lower, back down to this consolidation, and this ends up being a pretty balanced profile, right? This day didn't really go anywhere. But you can see that there were a lot of things that we could have been watching for and we could have anticipated on a day that didn't even trend, that we still could have made money during the day, right? At that point, it's all about just setting up your buying and sell areas and being strategic about when you're going to take profit and what you expect, and being ready for the market to run, and also being ready if it doesn't run. All right, so here, now we're on to the next day. We consolidate through here. Now we're consolidating on previous day's value. So now we're just in value. This is just one big bubble of value at this point, right? And it's hanging out there. It doesn't look excited to move any way or the other. But what we do know is that once it spends enough time in value, which is what you usually see on a chart, is consolidation, that it will break out of the consolidation, break away from the value, seeking new value. And so that's what we see here, right? So price explores back down to the downside. See, so it it came and tested again that previous area, and you look farther back here, this was never really filled in, right? So this is still a lower volume area here. Price comes back down to the previous consolidation here, is immediately rejected back up into yesterday's value volume point of control, continues to churn and chop around that center, and then finally we get a bit of price exploration to the upside. So it breaks out here. So now we're looking at, right? We're looking at this previous resistance level here. We're looking at this previous resistance level up here. Breaks through those, consolidates, breaks back down, and then we have our reversal. And it comes back down, tests the value area low from the previous day. And so essentially you have, and so when we talk about trading a trend, right? This is not easy. And think about how impossible, if you have no idea this is happening underneath the surface and aren't looking at the volume in the market profile, it becomes impossible. How else do you interpret the price action? How else do you interpret being able to read what's happening and why it's happening? So that's why I'm super stoked to be able to share that with you guys. And we'll go much deeper into this and how it all relates to being able to tying it into the trade in the strategy, in the part 3 in the strategy course. We go deep because I use it a lot. But for now, I think that was a pretty good primer on market profile and volume profile. And so moving on to the next.